Good evening, everyone. On behalf of Akmil Advisor and Asston Pharmaceutical Limited, I, Jay Rupabera, welcome you to the virtual meet of Asston Pharmaceutical Limited. Asston Pharmaceutical Limited, established in 2019, is engaged in the manufacturing and marketing of pharmaceutical and nutraceutical products. With a presence in 10 plus countries, strong focus on South and West Africa, it offers a wide range of formulations including tablets, capsules, syrups, powders, and more. The company operates in license, contract manufacturing, and low license, and partner with WHO-GMP-certified facilities. With over 150 registered trademarks, it focuses on affordable, quality-driven solutions for price-sensitive markets. Now, we welcome our guest, Dr. Ashish Salakar, a Managing Director. Welcome, sir.
Hello,
Ms.
good
Saili
afternoon.
More, Full-time Director and CEO.
Hello everyone.
Mr. Sachin Barak, Non-Executive Director.
Hello everyone.
And Miss Manga Jha and Mr. Rishabh Singhvi from Sobhagya Capital, Mancha team.
Hello everyone.
Good afternoon, everyone.
Now, I had like to invite Ashish sir to give a brief presentation. Thank you, sir. Yes, Ashish sir, you can start.
Yeah, good afternoon, everyone. Okay, myself, Dr. Ashish Sakarkar, Managing Director of the company, Asston Pharmaceuticals Limited. This company, we are rapidly expanding pharmaceutical company in healthcare for exporting our products internationally. Okay. Currently, we are operating in several African countries, South African countries and West African countries. And we work with closely our WHO partners. We got our goods manufactured from this WHO partner as well as in our company with some nutraceutical products. So this is a wide variety of modern medicines in various forms. We are export globally. Next. So this is the journey for Asston Pharmaceuticals where we started in 2019. In 2020, we started the secure trademark in India as well as abroad for multiple of our products, tablet, capsules, syrups and sachets. In 2021, we have crossed our first milestone of 10 CR turnover. In 2022, company established its own manufacturing unit at additional MIDC Ambernath, Mumbai, and which is again a big milestone for our company to have our own manufacturing unit. In 2023, we company expand additional African countries and receives registration in many of our African countries and in Asian markets such as Cambodia. In 2025, now company convert into private limited company into limited company. So this is the additional milestone. And today we are here for our IPO meet. So this is again good biggest milestone of our journey. Next. These all are our directors and my partners. Saili Jairam More, who is old-time director and CEO. Then Vijay Shapurkar is independent director. Sachin Badak is a non-executive director. And Rishabh Kumar Jain is also non-executive director. Next. Okay. Madam, can you explain? Saili, madam.
See, basically our business model, we have manufacturing facility on our own at K50 Amirnath, state-of-the-art facility. And apart from that, we have 5 multiple GMP locations where we get the products manufactured, and we cater all our marketing requirements at various countries in Africa. We have an asset-light model. Basically, we are more dependent on the manufacturing facilities on loan licensee basis on our own license. So obviously, the our operation model is a asset-light model, and even we have a warehousing, advanced warehousing. Finished products are stored in state-of-the-art facility of all the locations, and we have also extended the new warehouse for our further requirements. Then products are exported primarily to the West Africa and Asian markets, where from there they distributed to the local market from our registered distributors in respective countries. Next. This is
There
our
are some
product.
registered products. Yeah. Continue, madam.
This is our product portfolio. Mainly, we are into tablet, capsules, syrups, sachets, creams in all segments of the healthcare products. So these are few samples where we have our branded products and generic products as well. Yeah, Ashish.
Yeah. See, basically, Aston's majority export sales are in pharmaceutical as well as in nutraceutical. We manufactured our pharmaceutical products from WHO factory with our WHO factories partnerships serving African countries like Sierra Leone, Mali, Liberia, Ghana, etc. Around 150 products are registered till date, and we already registered in Cambodia and 10 products already filed in Cambodia for future business. This product portfolio, this include tablet, this include capsule, this includes syrup, sachets, cream, and eye drops. These facilities are approved by government authorities like Sierra Leone and Ghana. Apart from our factory, we have our contract manufacturing and loan licensing unit. La- like we send our raw material, packing material to this unit, and they convert into finished good on our own brand, and then we export on our own name. In as considered to domestic sales are it's not the big part of the sale. It's very small part, but it is having good local demand with economic conditions and competitions. Next. This is our own manufacturing facility located at Ambernath, where we manufacture tablets with the given capacity. Like if the tablets are uncoated tablets, capacity is around 8 crore, and it's also depend upon the average weight of the tablet. How how much gram tablet we are manufacturing. If it is less than 300 milligram, we can manufacture up to 8 crore. If it is more than that, we can go up to 5 crore tablet. Again, it depends upon which tablets are uncoated tablets or coated tablet. Because it's coated tablet, it took time for manufacture, so capacity slows down to 6 crore to or 4.5 crore. Then other forms are sachet. We are making sachets in like oral rehydration salt, vitamin D3 sachets like this, from 1 gram capacity to 10 gram capacity. At present, we have capacity of 100,000 sachet per day, which are utilizing completely. And in terms of syrup, we have the plant of around 500 liter capacity, where we manufacture around 200,000 bottle per month if it is 100 ml, and if it is more than that 200 ml, we are manufacturing around 100,000 bottle per month. Next. So this slide shows geographic wise distribution of revenue. Like in FY year 23, we are into export market only, where we have made revenue of 653 lakhs. In FY year 24, we meet revenue of 1562 lakhs or 15.62 CR. In 25 year FY25, we have crossed our first milestone of 25 crore. Out of these, 3.27 crore is from domestic market or local supply. And in April and May, in last 2 months, we already crossed 620 lakhs. And we are planning to increase up to 40 lakhs, 40 CR this year. Yeah, next. This is the vertical segment-wise revenue, like how much in pharmaceutical and how much in nutraceutical. In FY23, pharmaceutical portion is around 575 lakhs and nutraceutical portion is around 77 lakhs. In year 24, it increased to 13.97 CR and for nutraceutical, it increased up to 1.65 crore. In FY year 25, the pharmaceutical sale is around 19.3 crore and nutraceutical sales is around 5.75 CR. And in last 2 months, April and May, the pharmaceutical sale is around 544 lakhs and nutraceutical sales is around 74 lakhs, includes 6.18 CR. Next. And this is the revenue breakup customer wise. This in 23, from our largest customer, they cater out of 6.53 crore, they cater 2.58 from largest customer, or you can say top 10 customer, and balance revenue come 3.95 CR with other customer. Same in 2024. The largest customer or extreme customer, they generate 4.53 crore turnover from Aston, and other people they take 11 crore. And in year 25, it's 7 crore and 18 crore other customer, because we started registration in different countries, so majority turnover come from that country also. And in last 2 months, the regular customer take 2.63 crore, and other customer take 3.55 crore, make it 6.18 CR in April and May 25. Next. Yeah. Sachin, you can explain this.
Yeah, Indian pharmaceutical industry size and market insight. The 65 billion pharma market size expected by 2024, and around 130 billion projected by 2030, and 450 billion target market size by 2047, all around the Indian market. The Indian market pharmaceutical industry is expanding rapidly and is poised to capture a significant share of the global market throughout the focus on quality abroad. As one of the top global pharmaceutical active pharmaceutical ingredient API, and India plays a critical role in global market medicine supply chain. India is the world largest supplier of generic drug and leader in a affordable vaccine. So we can also the pharmaceutical industry growing at a 9.43 CAGR over in a 9 years, reached a turnover the 4.17 lakhs in crore to 2023 to 2024. Key significant include generic OTC drug, API vaccine, and biosimilars, and contract manufacturing. India also has the most US FDA compliance the plants and account for 8% of global API production. The domestic pharmaceutical market is seeing steady growth in both sales export backed by demand in the US and EU market. So the medical device sector is India is emerging strongly with the government supply aim and significantly boosting its size and global presence. So Indian pharmaceutical market around 2024 is 65, 2030 130, and around 2047 we should be the global market should be in a 450. So we are the part of this pharmaceutical industry. Next.
Yeah, continue, Sachin.
The pharmaceutical product export India global reach around the Indian known as the pharmacy of the world, supplying 20% of global generic medicines. Exports from over 200 countries, including the US, EU, Japan, and Australia. India meets 50% of global vaccine demand and play a key role in immunization program worldwide. So major the export market include the USA, UK, South Africa, Netherlands, and France also. The India has the highest number of US FDA, WHO GMP, and EU GMP compliant facility outside the West. The new GMP rules notified the 2023 aim to further align with the global quality standards. India firms dominate global supply of vaccine, essential medicine, including the COVID, like a hydroxychloroquine. 8 of the top 20 global generic drug company are based in India. Next.
Yeah, madam, you can explain no issue.
See, now these are the competitive strengths what Aston Pharmaceutical has. The number one is we have a very good techno background because of I mean we have very good team of technical people with us, which has a formulation expertise, which with QA, QC, regulatory. Everything is handled by the promoter group of the company or director group of the company. Then we have around, I mean, in totality, around more than 30 years of experience with all the promoters in technical background. So, and on that basis, we have already marketed wide range of products in terms of tablets, capsules, syrups, injections, creams, as per the requirements from the customers. Then also we have our facility, state-of-the-art facility, which is a really strategic location. And we have a registered office in Navi Mumbai, Belapur, which is nearby our seaport and airport as well. Then we have a skilled workforce to take care of the manufacturing and take care of the quality. Relationship with the contract manufacturers. We have around 5+ contract manufacturers with us who are all WHO GMP compliant as per the industry. And we really maintain a very good relationship so that they are dispatching the goods in time, giving us the priority for our production. Recently, we have developed a good manufacturing facility in Gujarat, where they take care of all our formulations and cater our growing requirement day by day. Then we have a quality assurance department well in place, where we have a good team who takes care of our QA, QC protocols to ensure every product meets domestic and international quality standards and its commitment to delivering excellence across all the markets we have. Then also the client's relationship is a major strength in our organization. Dr. Ashish Sakalkar, he himself taking care of markets. He goes there personally to meet them. See, when we started the business in 2019, we had only 2 customers, and now we have a very good portfolio of customers. This is mainly because of the very good relationship with the clients and very good order portfolio we have. I mean, continuous flow of orders is mainly because of the good relationship with the our clients from the export markets. Also, due to the technical background, we always ensure that we give the competitive pricing because there is a huge competition in this market. Though it's a volume-based market, we have to be competitive in terms of pricing and quality as well. So this is the main strength of our team, where we give the quality product in competitive pricing. Then also there is a asset liability as asset model. Are outsourcing the products from the on loan licensing basis and third party basis. We have working capital capex burdens on lesser side, and mainly the regulatory ensuring in all those things is also getting lower side. So these are the strengths of Aston Pharmaceuticals Limited. business strategy in terms of expanding our footprints. See, now Aston is basically initially to start with the business, we focused on West African countries like Ghana, Liberia, Sierra Leone, Mali, etc., etc. But now have we have decided started with the registration process, and in fact, we have done the registration in Cambodia in Asian markets. Slowly, slowly, we are moving towards the South African market in countries like Zambia, Nigeria, Cambodia. This is how we are expanding our footprint rest on all the rest of the world wherever possible to remove the vulnerability geographically. Also, at the same time, we are expanding our product offerings also. Because, see, due to some limitations in working capital, we could not make the fulfillment of all the products, which are basically high value products. So, now what we are going to do is, along with the existing products, we will definitely going to increase our revenue from offering the different diversification in portfolio of products, and then also along with the geographical growth, we are going to expand more in other countries. Now, along with that, we have to increase the warehouse capabilities, which is a really hurdle for us to maintain the consistent supply or consistent flow of products. So now, at present, we have a good warehousing facility in all our locations, including our own plant. But we are trying to extending warehousing capacity in nearby customs warehouse so that very easily we can accommodate all the goods at a time to dispatch. Then, with the increase in the product portfolio and increase in the volumes, we have to increase the number of contract manufacturers also, increasing the number of partners which will mitigate risks such as facility shutdowns, regulatory issues, enhancing pricing leverage, etc., etc. Investment and upgradation in information technology also is one of the most important part which is really required in our organizations. As since the company was new, we were working on basic ERP systems, which we have now very good scope to improve on ERP systems and IT technology further. Next. Ashish.
SWOT analysis. The strength is given. Experienced leadership and skilled workforce. In-house quality assurance QA and quality control for formulation, which is approved by FDA and FSSI also. Then we have the model outsource manufacturing with tie-up with contract manufacturers and distributors. Now, working capital cannot block in inventory. That is, production is order based. So we procured our raw material and packing material as per the requirement for production in different sites. Now, in we have our own manufacturing unit at Ambernath, which benefits our manufacturing to be on time, and it is at the strategic location near airport as well as seaport, because many of our goods are transported through Nava Shiva, through sea. So it is very near location for us, and we got some export benefits from government of India, because they also support for export related incentive for exporters. Now the opportunity for Aston Pharmaceutical, we have very good opportunity to formulate and produce our generic medicine for less advantaged countries. That's potential to export into untapped region or different product categories with growing needs. Huge opportunity to grow inorganically. Leverage to improve its IT solution, to improve sales and increase the number of contract manufacturer to increase our sale or to increase our manufacturing capacity. Some weaknesses we have, like loss of control over contract manufacturer. Still, we have our own staff at the location of contract manufacturer. But if we have not able to supply 100% material on time, then we have not having any control to ask them to take our product for manufacturing. So this will delay or some loss for the business. Not actually loss, it is a delay of our business. So this is one weakness, dependency on the contract manufacturer. And the other weakness means majority of our revenue from export market. So time take to convert after transfer of money from the customer, time take to reach India or convert into dollar to rupees. So that will take some time. Then threats. One second. Compliance with evolving safety and regulatory standards for the regulators may increase the cost. Then intense competition from both established firms as well as new entities in the generic market. Any lapse in manufacturing standard can harm consumer health and may be fatal, posing a serious risk to the company reputation and operation. Though we are taking too much care for this point. Any force major events like COVID can hurt badly as majority revenue from export. But due to in COVID season, we already increased our revenue in 21-22, which you can see from the balance sheet. Any significant instability, force major events in Sierra Leone and Africa can be detrimental effect on our business. But it is not happen. It's quite once in 100 years. Next. Okay. Menka madam, can you explain this?
Yes, sir.
Yeah.
So, hi, this is Menka Jha from Sobhagya Capital Options Private Limited, and just I am explaining these financial highlights. Revenue is it seems growing from 653.80 lakhs to 2503.92 lakhs in FY25 with a good CAGR report, and for May 25 also for 2 months this got substantial revenue, and going forward it will be in the parameters of the historical data what company has done in the past. And EBITDA margin, it also seems very good. Means I can't say very, means adjective can't be used. It's substantial increasing parameters you can see in both EBITDA margin and PAT margin also. Next.
Review IPO.
And in profit and loss statement, total income has increased historically from 719.19 lakhs to 2561.02 lakhs in FY25, and for 2 months it has gone to 620.93 lakhs. Also, PAT has increased from 105.66 lakhs to 432.51 lakhs in FY25, and with audited financials of May 25, it seems 132.24 lakhs. Next slide. Balance sheet, you can go through. The net worth has increased from 198.59 lakhs to 107.176 in FY25, and it is at 1204.00 in May 25. And the main figure, total assets has was in FY23 it was 1369.49 and increased to 281.26 lakhs, and in May 25 it is 3183.43 lakhs. You can go through this cash flow statement. Operating activities, it is in negative, although however company has seems good cash from financial activities and investing activities, and net cash flow is also to the range uh, uh, from 119.27 lakhs to 1.60 lakhs in May 25. Return on equity and return on capital equity, just you can see through the graph. It is 72.49 in FY20 through 23, and it goes to 69.73 in May 25, and it was 50.56 in FY25. And ROC, you can see just in FY23 it was 56.08 and has gone to 79.46 in May 25. Debt to equity ratio, actually company is very you can see debt to equity ratio is in FY23 it was high, but substantially it has decreased to 0.65 in May 25, and current ratio you can go through. It is 1.09 in FY23, and it is substantially the same in FY25 and May 25 as of now. And next, fixed asset turnover ratio, it was 6.36 in FY23, and it has gone to 24.47 in FY25, and in May 25 it came down to 6.55. EPS, you can just see it has substantially increased to FY25 from 1.89 to 6.90, and in May 25 it is 2.11. And net asset value per share, it was 3.55 in FY23, and it is 19.20 in May 25, and it was 17.09 in FY25. Rishabh sir, you may go through this slide.
Yes, everyone, welcome to the virtual roadshow and IPO meet of Asston Pharmaceutical Limited. So as you can see, the anchor bidding is tomorrow, 8th of July 2025, and we will be giving the details to the exchange of the anchor bidders, the final details. The issue opening is scheduled for Wednesday, the 9th of July, and the issue closing is scheduled for Friday, the 11th of July 2025. The total issue comprises of 22,41,000 equity shares of 10 rupees each, corresponding to an issue size of 27.56 crores at the upper end of the spectrum of the price band of 115 to 123 rupees per share. So the issue size has been computed on the basis of the value of 123 rupees per share. The lot size is of 1,000 equity shares. The listing exchange is BSE SME. The book running lead manager is Sovaga Capital Options Private Limited, and the registrar to the issue is Mashitla Securities Private Limited.
Next.
The promoter and promoter, the shareholding pattern, the pre-issue shareholding, the promoter and promoter group is holding approximately 69%, with the public holding 31%, and the post-issue shareholding would be approximately 51% for the promoter group and 49% for the public. So the issue structure is as follows. The QIB anchor is off. So the total quantity is 22,41,000 shares. The QIB anchor portion is 6,35,000. The qualified institutional buyer is 4,25,000. The non-institutional investors 3,22,000. RII is 7,46,000. And the share of the market maker is 101,13,000 equity shares. So the pre-issue equity shares are 62.71 lakhs. The post-issue equity shares are 85.12 lakhs. And the post-issue implied market cap at the upper end of the spectrum is 104.7 crore, so approximately 105 crore. So again, the objects of the issue, we have acquiring machinery to the extent of 600 lakhs, incremental working capital requirement to the extent of 1300 lakhs, repayment of outstanding liabilities 100 lakhs, and the remaining amount would be for general corporate purposes depending on the net proceeds of the issue post expenses and depending on the subscription at the upper or the lower band of the spectrum. Thank you very much, and we would be very happy to take any questions that you may have.
Thank you, Tim, for giving the great presentation. And now we'll start the question and answer session. So, yeah. Good evening, sir. Presentation looks good. So first question is, can you explain the growth potential in West Africa and how well Aston is doing in that market?
Yeah, this is Dr. Ashish. Okay, the growth potential in West Africa is huge. Like Aston is taking care of only hardly 5 or 7% of the market capital from the West African total market capital. So we have extreme growth potential in the current countries where we are doing business, and we are expanding our product range to get the market capitalization. So Aston is doing very good inside this market by addition of new products, new variety of products with the generic name as well as Aston own brand to get the good market capital from the existing countries also.
Next. Very well explained presentation, team. Good luck for the IPO.
Thank you.
Feeling proud that our Marathi Manus is coming up with the IPO of the very best team.
Thank you.
Thanks a lot.
Next. One question on contract manufacturing and loan licensing. Business are these finished product marketed by our brand, and also do we export them directly or through merchant exports?
No, sir, we have our 100% export in the name of Asston Pharmaceuticals Limited. So we don't have any merchant exporter in between. We directly doing our own export.
Next. Can you explain on how the asset-light model has helped scale the business efficiently?
Sir, actually, see, being a asset-light model, there are pros and cons both way. But since asset-light model, you have to have, you reduce your manpower cost first thing. Then the manufacturing, complete manufacturing process is handled by someone else, which reduce time also. And cost is a major factor here following asset-light model. And you can't capture the total requirement of your market from the existing facility on your own. So you have to have go for this model for mitigate the requirements for this business.
Next. Currently, around 88% of your revenue comes from pharmaceutical products. What are the key reasons for the limited sales of nutraceuticals?
Nutraceutical product we started recently, two years before. So that portion will also increase like pharmaceutical portions. Majority of brands are under registration.
Yeah. Next. How many products are currently under development or awaiting approval in new geographies?
Is around 25 products are under development. for new geographies like Cambodia and Ghana.
Next. Profit margin has increased from 8.5 to around 17% this year. What were the key factors that contribute to the sharp improvement?
The key factor for increase in profit margin, the products are identified, which products are giving good margins and supplied on large basis, and also got some government contract from the countries where we are already registered. That will help us to increase the turnover as well as profit margin sharply.
Next. What differentiate Aston business model from other players in pharmaceutical and nutraceutical segments?
Yeah. Correct. Madam,
Yes,
you
sir.
can explain.
See, the Aston's business model, basically, we are, marketing is our backbone of the company. We start with the marketing and not from the manufacturing. So we have the orders first in hand, and there is a very good order flow. So we have, we never wait for the orders. We have to just get the products manufactured and export. Whereas many players, they start with the manufacturing and then looking for the market. That is the main difference between the model. Business model.
Next. Despite higher profit margin, why is the company not generating positive operating cash flow?
Yeah, it's in earlier or starting period, company has to make expenses on registration and everything, and still as not established inside market, people are not giving us credit facility for raw material and packing material. So many of the things we have to procure on cash basis. That is why first 2 or 3 year cash margin is in negative, but now it's automatically coming in positive sense.
And also I can add, money was stuck in working capital cycle. Now
Yeah.
that is not there.
Yes.
Thank you.
Okay. Next. After IPO, promoter holding is now just 50%. Are you planning to buy back shares or increase your holding again?
Yeah, we are definitely trying to increase our holding more than 60 to 65%.
Next. What growth outlook do we see for FY26 in revenue in percentage terms?
Actually, we cannot give projection in here. It is not in norms of SEBI ICDR regulation.
Next. What is your current order book size?
It's 40 crores, if I am correct. You can correct me, sir.
Correct. Absolutely correct.
Yes.
I did not answer because last question is same. So if I answer, that means automatically we reach up to 40 CR. That is why we
Yeah.
no answer.
Correct.
Next.
Next. Tim, what is our trade receivable and payable days?
Trade receivable is around 120 to 150. Payable is around 60 days to 90 days.
Next. Any ballpark revenue figures and growth rate if the old growth rates continue?
We cannot comment actually on this.
Next. I saw your video with Avina sir and it gave me a clear understanding of your company's business. Thank you. Next. Also, what is your strategy to grow the business?
We have
Sir, we actually the strategy of going in 3 ways. Like first is the revenue generation from our existing portfolio. I mean, whatever existing market we have, we already have very good order book from this existing market. So there we will increase our revenue. At the same time, we will diversify the product portfolio also, so that we will get the revenue from there also. And then we go for the geographical expansions, where with the business expansion, we will get the revenue from the third source. This is what our strategy as of today.
Next.
Thank
All
you.
the best. Thank you, ma'am, for answering.
Thanks a lot.
Thank you.
All the best. So I think we have covered majority of the question. Now we conclude the meeting. Thank you all for joining the meeting. Thank you, Ashish sir. Thank you, Sally ma'am. Thank you all
Thanks a
for
lot.
joining. Thank you.
Thank you,
Thank
sir.
you. Thanks a
Thank you.
lot.
Thank you, everyone. Thank you.
Thank you, Rishabh sir.
Thanks. Thank you, ma'am.
Thank you.
Thank you all. Yeah. Thank you, Rishabh sir.
Thank
Thank
you.
you,
Thank
Ray.
you, everyone.
Thank you.
Thank you. Thank you.